Dow Transport Index has almost doubled since its lows of the year. That compares with a 65% gain for the S&P 500. You see there the Dow Transport's up about 25% for the year, but obviously a bigger gain since the lows. So let's take a look at the transports one day after what UPS said would be the busiest shipping day of the holiday season. Jon Langenfeld is senior analyst at Robert W. Baird. He says investors should begin selectively buying domestic transports, and he's joining us from his firm in Milwaukee. Jon, welcome.
Good afternoon.
So first of all, let's just talk about a little bit of summary of this holiday season. Even though we heard from FedEx a forecast that was not greeted by investors, how do you think it'll all pan out when all is said and done?
Well, the interesting part is that the underlying trends are actually a little bit better than expected. We've seen a seasonal freight trend really since October that has been, quite encouraging, and I think it's a good sign as we head into 2010. We need to build on that confidence, but at least the signs are there.
What's really fueling that? I mean, besides the overall economic recovery that a lot of people are talking about, specifically, where is the demand coming from?
I think lean inventories are probably the biggest reason why we're seeing this mini surge in freight here as we end 2009. Inventory from the retailer's perspective, the manufacturer's perspective, it just went too far. And so what you're seeing now is those producers have to rush their goods to market, which is typically a good early cycle indicator of things to come.
So once, of course, they rush their stuff to market and we have people buying this holiday season, does there tend to be a sort of a seasonal dip going into the beginning of a new year? So how are the transports going to sort of carry through on the recovery?
Sure. I think, our view is that by the time we get to mid-2010, we'll see sustained economic growth that's going to support better freight trends. And with that in mind, these stocks are going to be 6 to 9 months ahead of that trend. So I actually think they can start out 2010 on a pretty positive note.
Jon, we're seeing that truckload and rail demand maintaining that seasonal trend, as you said, but is there a danger it could be a little bit misleading? We see this every holiday season. What metrics are you seeing that lead you to believe that by the middle of 2010 that things are in fact going to pick up, there's going to be some sustained growth?
Well, I think what you're seeing, whether you look at the air freight coming out of Asia or whether you're looking at some of the domestic expedited trucking modes, we're seeing that strength hold on much later into the seasonal period. Usually by the time you get to Thanksgiving, things fall off. We've seen that sustained to a nice level here. And again, I think what it points to is lean inventories. You need that carry through into 2010. So, we'll see. We need the confidence to continue. We need the economy to improve.
Well, and Jon, you said here that we're seeing the transport sort of 6 to 9 months ahead, which is what we tend to see during this kind of a cycle. So after a more than 90% rally in the Dow transports, can the stocks keep up with the economy getting better, or are you going to see the rally sort of peter out?
We need to have the earnings come through. I mean, that's the bottom line. If you look at these stocks from year-to-date perspective, a lot of them have actually underperformed the broader market. So we would argue we've been through about 3 years of a freight recession. We'd argue on the other side of that, we should have a couple good years of solid earnings performance, which should lead to good stock performance as well.
Jon, let's get to some of your individual picks here. We just heard about Warren Buffett, obviously, getting into Burlington Northern, but that's not actually your top rail pick. Why don't you agree with Warren?
Well, we did agree with Warren, and in fact, that was one of our top picks. Now that the takeout premium is in that stock, it doesn't make sense for investors to chase that one. However, I think the rails in general make a lot of sense. They're great plays on the economic recovery. They have strong pricing power, and then they also have good margin recovery stories. So CSX would be our best pick in that space.
Why CSX specifically?
They tend to have more margin upside because they have more operational improvement that they've been able to lay out. I think they got cut short a little bit by the recession in 08, and we'll see more of that in 2010 and 11.
Jon, you also like Knight Transportation and J.B. Hunt. Tell us why.
We think the truckload market, if you look at the capacity base out there, it has been systematically underinvested in for the last 3 years.
Why do you suppose that is?
I think it's because the balance sheets are poor, freight demand is poor, and quite frankly, the freight rates have been just awful. So we're at the bottom of that cycle, and I think with the economy, we'll get much, much better rates, and I think we'll start to see that here in the next 6 to 9 months.
And J.B. Hunt as well?
Similar play. They have an intermodal rail influence, so it's almost a cross between the rails and the trucks, but a very unique franchise, a best-in-class intermodal franchise, and I think a good way to play these trends.
John, you just told Julie that this is basically like a 3-year dip. What happened?
Well, I think you go back 2 or 3 years ago, the retailers, whether they knew it or not, they were foreshadowing the things to come. They tightened inventory policies, they pulled back on spending, and the freight demand slowed down. It pretty much peaked out in mid-2006, and I would argue the freight recession started in early 2007. That has been compounded by the financial crisis, which obviously continues through today.
I also want to ask you, John, about a stock that is definitely not on your list of top picks. I don't think it's on many folks these days, and that's YRC. And there's been a sort of the threat of bankruptcy hovering over this company. Tell us about the latest here. How likely do you think it is at this point?
Very challenging for them. I think the question is not, whether or not they declare bankruptcy. I think the question is, are they going to remain an ongoing concern? And they have some plans in place to try to get them into 2010. I would tell you there's still a lot of challenges that lie ahead on this one.
And as a going concern, is anyone interested perhaps in stepping in here? I mean, obviously it hasn't happened thus far, but do they have any assets that are attractive?
I think they have assets that are attractive, but right now they're pretty much all pledged to the banks. So the ability of a white knight or a suitor to come in on this one would have to be done through a bankruptcy proceeding.
John, we have about 30 seconds left. You tell us that ocean freight volumes remain pressured. What's going on there?
Well, ocean is probably a better indicator than air freight of what the broader demand footprint looks like. So our point is, while air freight has picked up and been very strong over the last couple months, ocean freight has remained subdued, which I think is still that underlying element that the economy is not quite hitting on all cylinders yet.
Jon Langenfeld, senior analyst at Robert W. Baird, joining us this afternoon from Milwaukee. Thanks so much. Jess?